Alright, boys and girls, sorry about the delays. There was a little bit of technical issue, but we're online now. Interesting, very interesting in terms of the market's action so far today in the European session to begin with anyway. This is, in terms of what we're seeing here, we're seeing a little bit of US dollar pushback. Risk is on, definitely. Now this is hurting the trade that we're in, which is long euro. Now remember, we were long euro yesterday around about 117.60, and the market has pulled back most of those gains that we were enjoying above 118. Now it's probably just mostly US dollar pushback, and it's not exactly like a give up on the idea, but definitely I'm going to keep my stop here below yesterday's low, and if we get stopped out, I'll reevaluate whether to get long again at the 117 level, or just wait for some price action, which suggests that the euro is going higher, because this is quite dangerous. This is quite negative actually. This is in terms of what you expect to see if you're in terms of the bullish outlook. This is not what you wanted. Yeah, so in terms of closing out early, or should I have closed out on the break of 118? I mean, I was waiting to see what happened. Obviously we have gone back below, and this is a trade where the trade was working out and then it didn't work out. It's not a, that happens. It happens a fair bit actually, and so you don't really get upset, but you definitely take notice when the market turns, because this is, while it's very bullish yesterday, it's turning into quite bearish today. And perhaps the US dollar will have a bit more kick here. Seeing dollar yen on the front foot all day, and at the moment is testing day highs. And if it starts to threaten to get back to 110, that's a really big level, and that's where you might see a bit more of battle. And that would coincide also with probably the euro at lower 117s. If you're a little bit more risk on and you're looking for a trade, which I was looking at today, is actually a combination of the long euro and the long dollar yen. And that's long euro yen. And these levels after the pullback from 131 are quite nice, and the price action is quite nice, and the idea behind it that the ECB tapering is coming in September, and basically the maybe the Trump-based selling is dying off, and the US stocks are going to be continue their grind higher, does sort of support the idea that you do want to be long some sort of yen cross. And in regards to which way to play it, I like euro yen or dollar yen. Euro yen's just got that little bit extra spice there. Many ways in which Draghi can come across as upbeat on the economy and or talk about tapering. If he doesn't talk about tapering, the negativity that the market might take from that isn't going to be too great. It's just going to have to wait for that ECB meeting, and the ECB meeting in September is supposed to be the big one. So you might get a lot of rally into that on anticipation. And the whole story is a positive story, so it's likely to be positive price action. It's unlikely that the market will be negative unless the ECB wants to leak some details which are a lot less in terms of the size and scope of the QE tapering, or in terms of the timing of the tapering. If the ECB wants to delay that, then it can definitely do it. In terms of the trade I did today as well, we did a bit of long DAX at the open. Didn't really kick as high as it could have. It's definitely lagging in terms of where we are compared to the pullback you got in US stocks. The pullback in DAX is a lot bigger. A lot of that's driven by the euro rally, but in terms of the sentiment change and the market snapping higher, hasn't really done it aggressive yet, and the sellers in some regards are still in control. The sell-off in the US stocks though seems to have faded, and you've had 2 days of stabilization, a bit of a bounce in yesterday. So the selling of US stocks is really hard to do lately, and if it doesn't get some follow-through selling in the next two or 3 days, based upon maybe new fresh Trump stories or new fresh North Korea story, then the dip buyers will regain control, and the grind higher can resume. And so just let me check that you're actually getting everything through here. Do want to make sure that we're seeing alright, looks like it's working, boys. So yeah, I mean it's a nice recovery here. You're seeing the US dollar, you're seeing it come through a lot against the pound. It's at new lows here, and the Aussie dollar's sort of faded as well, and the Aussie dollar's well supported. So the euro has fallen sympathy, not as much as the rest. but definitely is under pressure, and the US dollar is enjoying these nice gains. Now the other pair which in this sort of environment is going to do really badly is gold. And although we've only fallen a little bit, actually a lot less than we could have, might be some room here in terms of the downside here in the start of the US session. A lot of the trading in gold happens at the start of the US session, but what you'll see here is if this 1300 starts to look like a short-term top, and that the 1290 little next rally is the new lower high, and the market breaks 1280 here, this is going to look a lot more bearish in the short term. And so, you know, you sort of need to feed constant negative stories for gold to continue higher at these levels, and it's such a big level that I don't think anyone wants to be gambling on the fact of going above that until we get some sort of more solid negative stock market story. The idea of the Trump agenda being derailed is more of a theme, and it really has to take hold, you know, with a catalyst maybe. At the moment it's just, you know, a couple of business councils being denied and Trump going after some Republican leadership, but you know, there hasn't been any death blows to it, and so the market may be still enjoying buying on dips, and you know, that definitely the story hasn't grabbed complete control yet. This is more profit taking than anything else, and a little bit of gentle selling. This is not aggressive selling at all, and the VIX is showing that. The VIX is the price of downside protection, hasn't really spiked higher, and it's been fading. I think it's back below 14 today. So in terms of if I believe in the dollar yen story, I mean, look, it's not so much believe in it, but to break 108 is a big mission, and to break 108 without the Trump story getting bigger or stock markets getting weaker, down below 110 you do have a lot of Japanese corporates demand, and you do have a lot of just general speculator here, and a lot of support from the previous days so far this year, and it is a little bit, you don't want to get caught short, you know, and that's more the theme. Yeah, the sellers are once or twice bitten and are three or four times shy here, and it's similar to the stock market. If you don't have that follow through selling, it's very hard to have follow through conviction in the dollar yen down, and the euro yen, pound yen, Aussie yen, all the yen crosses, given the backdrop in the current monetary policy around the world, is definitely there's a lot of buyers looking to buy on dips. So I'm very open to buying the euro yen, very open to potential dollar yen rebound here, and it gets a bit more serious if it gets above 110. So this is just a gentle rebound so far. If it gets about 110 though, you got the market on the wrong side. You know, the sentiment was very negative, and it's had a nice reversal here, and a lot of people have hopped on this sort of this feeling that maybe we're going to break 108 and then go down to 105. So short-term speculators are definitely on the wrong side of the market here if the market gets back above 110. There's not really much data though, and a lot of the focus this week is on the Yellen speech on Friday, and Draghi's speech. Yellen probably has the ability to do a bit more impact than Draghi, if Draghi's you know, unlikely to announce his taper plans at this meeting. The impact for Yellen is if she sort of buys conditionality, buys optionality, which is keeps the door open for the Fed raising in December, you know, keeping the door a lot wider open than currently the market is priced in. The market's very bearish, you know, very dovish on the Fed actually. So you know, the whole inflation is slowing, and the Fed's not going to raise rates. That's the market's idea, not the Fed's idea. The Fed's said a couple of times, or Yellen said a couple of times, that you might get the you might have lower inflation than they forecast, and this could you know, give us a sort of reason not to raise rates. But she hasn't explicitly said they're not raising rates, and they've been raising rates in the low inflation environment so far in the recovery. So if she well and truly leaves the December rate hike on as a possibility, then the market is quite short the US dollar here. And if you don't get any news from Draghi, then there is a little bit of way that the US dollar can enjoy a little bit gains, especially if stocks resume buying and risk is remaining on, and just any sort of half positive story regarding Trump and maybe his new sort of direction he seems to have gone. He's very reactionary, Trump, and so if he does sort of try to mend relationships with, say, the Republican establishment in the next few days, he's coming out of his holiday, you might see the market respond more aggressively to such an idea. And so it's sort of, when you're looking for US dollar recoveries, remember the US dollar is positioned very, very short right now. So you're talking about net long positions on gold are one of the longest in a year or so. The euro positioning is quite stretched. Dollar yen positioning is quite stretched. The market in general is very, very short US dollars. So that's another reason why it's hard to ultra sell the US dollar without that main sort of conviction that you can't get unless the Fed gives it. Very unlikely the Fed's going to give it. And if you don't get the stock market selling or the market completely capitulating on Trump, then it's not really, the timing's not there. Yeah. So you just got to be careful, got to be patient if you're bearish, and probably wait for a bigger story. Or maybe you'll get lucky in tomorrow and North Korea will say something crazy as the US and South Korea military exercises begin. But they've been very well telegraphed, so it's not like it's a surprise. Any sort of comments from Kim aren't going to be too aggressive. Yeah, so that's the setup here. I've been caught a little bit wrong-footed here on the euro potentially. Stops are pretty close, and the price action definitely is catching me off guard. I don't mind the euro yen though, and that's another trade I've been doing personally. So the euro yen is a trade I really like. I probably should have waited for this pullback that we got in the last couple of hours. A much better level than buying at the highs, or the potential new breakouts that were happening in Asia at the 129 level. And we did have a pullback of 70 pips, which is a lot of volatility intraday here for this pair. But if we now make a fresh high, then I think a lot more people will jump aboard on this. And the trade to me makes a lot of sense in the next 3 weeks if stocks settle down and North Korea fades and Trump's story sort of fades as well. And the US dollar responds to any sort of increased chance of the Fed raising rates. I do like this euro yen. I do like euro long in general. So against the yen is sort of like the weakest currency, which has also had a bit of strength in the past couple of weeks. So the euro yen, when the dollar yen's at 113 or 112, is a little bit more dangerous than when dollar yen's at 109, if that makes sense. Let's have a little look at the data, guys. Anyone, any pairs that you want me to look at, any of the crosses, just send me a little PM here. I'm still running off the one screen as I've moved into the new apartment, and I haven't yet got my table and chair delivered, but it's still I can still respond to you if you do want to paste a little question there. Otherwise, we will move on to look at a couple of pieces of research and see how the banks are interpreting some of this price action. Another little shift in another day and another little change in US dollar sentiment. Although you saw signs of this US dollar rally with the dollar yen move yesterday during the US session as it responded to a little bit of high yields, but mostly the stock market stabilizing, that little rally there. Cable, yeah. Look, it's a lot weaker than the euro, and it has less of a story to be trying to fight US dollar strength. So it's almost like if you're gonna buy US dollar, you pick the pairs where there's going to be the most movement. And so the dollar yen's one, and selling the pound's one, because the buyers of the pound don't have a reason yet. And it's not likely that the Bank of England's going to be raising anytime soon, given its leadership. And the Brexit is more muddied than any other time, since every day you come out, there's just more and more stories. Now, it's not like the market's selling here on any main conviction. It's just that the support is fading away. This sort of final little, I was actually looking to see if we're going to break higher here, and then maybe we'll jump on a resumption with the euro. But the failure here is quite damaging, and it becomes a little bit harder to be bullish at the moment. And so how far it can fall, it's got a fair bit of room here to fall. So in terms of how I would play it if I was looking to buy, ooh, it looks like it's actually found support at the same level as that last sell-off in July. But if we do break below here, then 126 and 125 sort of previous levels are down the. So little bit of look. If I was going to buy pound, I would definitely buy pound yen, right, in the current market, just because of that risk on and maybe the chance there for the dollar yen to drag it higher. But straight pound is a really dangerous sort of trade to me right now. It just doesn't have that story there. It might settle down though and pound yen rally. Let's have a look at pound yen. It's been finding support at 140 a few times actually, so it just found support again as well. Yeah, so long pound yen makes a lot of sense, right? Just here with a stop below 140 it's sort of you're playing into the risk on sort of recovery trade. If 140 seems to have held, then the good thing about pound yen is that you won't get 100 points, you get 200 or 300 points. So the risk reward is definitely there. You just got to have that ability to buy at sort of levels before the market's really turned, and it's still very much up in the air with what's going to happen here, and there's every possibility that North Korea or stocks roll over again. It's Trump doesn't have to play nice, he might play more aggressive. He had a big speech today where he didn't really give too much away in the domestic agenda. Did sort of change US military policy a little bit, open-ended war in Afghanistan, but nothing crazy from monetary side, I believe. EG, geez, it's a hard one, class. I like to sell euro pound. At the moment though, you really have to wait for the euro pound sort of probably hit bigger targets on the top side, and there's real little reason to stand in the way of this this grind higher. So that previous high, I think it was 93.50ish. This is back, and then above that, it did get a fair bit higher in the financial crisis. Sort of, there's a little reason to fight such a strong trend, but valuation just alone, it's sort of like Aussie Kiwi, right? And you can imagine that 90 cents is 105 on Aussie Kiwi, and so we're stretched by long-term historical valuations, and it's very likely at some point there's going to be a reversal. And but the story right now, the divergence in policy and the danger for the pound is so great that it's very hard to know the timing of such a reversal. And sort of like the pound itself, which you can't really buy with conviction, you can't really sell euro pound with conviction until we get a reason. The same sort of time that you get a good story out with buying the pound, then definitely euro pound will be a good sell. But at the moment, because I don't like to buy at these levels, I'm definitely not selling yet. Okay, so what I'm doing is waiting for above 93 to sell, and some sort of little bit of good news to add to the sell. But I'm in no hurry at all, and I'm not buying because this sort of trade, it does even have just nice sharp reversals intraday on the euro pound. You can find yourself very high, believing in you get trapped up here if you buy, because if the market does start to slowly grind lower, the euro pound itself, if it starts to show a little bit of bearish price action, might reverse. And so it's a bit more of a momentum trade, which is you buy it while everyone's buying, and then you get out. And if you're not already in, then you're a little too late, and this is danger zone, no man's land in the next 150 pips, where you've got to nurse the trade. You've got to be looking at it pretty closely. But you put a gun to my head, I'd buy, today. Just, I'm much more comfortable selling when there's a nice pound recovery, and you can get that sort of a gravity effect which comes through on the euro pound when the market does start to look at the pound recovery trade, as you might call it, in 2018. If we get it, we could get it this year as well. Just data has not been great, and it's getting softer a little in the UK, and there is really no clear path in the Brexit negotiations just yet. I think Britain's put out some pretty wish lists that the Eurozone's not really submitted to. There's still a couple open questions, like the Brexit exit bill that the UK has to pay, and a few other little things. So yeah, it's I'm actually avoiding the pound a little bit, guys, because it is weak, and I want to buy, and there's no story to buy or back it up, and the price action is very weak. So hope that makes sense. Sort of letting all these trades go through to the keeper without trying to hop on them. But you're welcome to you know, try if you like, but it's just very dangerous here. You get yourself, you could be a couple hundred pips short, you could be 500 pips short on the euro pound. Top will blow off, maybe, yeah. What would happen if the war broke out? Day one, yen would go very strong, yeah. Now, if Japan got involved and they were hitting Japan, then maybe the yen selling would come through. But short term, yen overseas investors will definitely pull back their money. Yeah, natural reaction is always been dollar yen lower, so that's yen strength. But I can imagine a scenario if they get nuked or something crazy happens, if they get shelled and missiles hit them, that the market might flee. And they might look to the US dollar to be the safe haven, the Swiss to be the safe haven, and definitely gold. It's not quite logical to be buying yen if they're getting hit. But in the first couple of days, if it's a South Korea, North Korea sort of event, then yeah, definitely dollar yen would go down initially. The Japanese Bank of Japan would probably intervene though, and that would be the danger. After 500 points or so fall, they'll start to check. And it depends on the size and the scope of the breakout, right, of the hostilities. Euro yen is what I'd rather buy than pound yen. So if you want me to put in my my trade idea there, then the euro yen is more of a buy. Honestly, it shouldn't get back below fresh lows in the day with that stocks falling. But you should have bought already, yeah, as the market turned here. So this is a little late into that game. Yeah, it looks like the lows are getting higher. I'm not sure if that lined up perfectly though. Don't think we could have drawn a trend line earlier. Yeah, almost could have. Yeah, pretty close, guys. Pretty close. And that would give a little bit more conviction as well. So pound yen over dollar yen. Euro yen over dollar yen, because I like the potential chances here for the euro to have a nice breakout still to the top side, or just hold its own against the US dollar. And over time head higher. I'm actually looking for 133 here, so quite a big move in the next 3 weeks ahead of ECB. And so I will probably do multiple trades on the same sort of idea, but it's just that the yen will get left behind, and the US dollar and the euro, if both the yields of the central banks or the yields in those countries, well, Eurozone, German yields probably, start to rise, then you can see that potential there. It's hard to visualize, isn't it? Get up there. So yeah, that's the trade to me. That makes sense. I'm a bit worried about this euro trade, obviously, but luckily we did close out short dollar yen. We had stopped entry yesterday. Where did we get out? Where was enough is enough. I think this morning in the start of the Asian session, I was like, yeah, that's it. This is coming at too strong. So we did get a little profit, but obviously I had a lot bigger profit at the US Open last night. But you know, little profit's better than no profit. Maybe I should have done the same thing with the euro. It's not game over yet. It's just not great. You know, and the Kiwi and the Aussie are really hard to be ultra bearish on as well. There's reasons to be supportive on the dips, and you know, range trading seems to be the way with the Aussie and the Kiwi right now. The central banks are doing their best to keep a lid on it, but there doesn't seem to be too much appetite to you know, take a test to 80 cents, or with the Kiwi anyway. You know, after the pretty aggressive sort of jawboning and little bit of weak local data, and also you know, dairy price has not been great in the last couple of months. It's hard to have conviction here, but generally when stocks and things settle down, they do look to buy the commodity currencies. But you're seeing the Aussie, Kiwi and Canadian dollar under pressure right now. Not really with dollar CAD though, isn't it? Dollar CAD's probably the strongest of the three. So CAD is probably the strongest of the three. All right, stop distracting me. We've got to get through just a little bit of idea. Yeah, 133 is a big one, right? In terms of the TP, a bit ambitious, but I do want to be a little bit more ambitious in some of my trades in the next little while. And one little trick here. What you're looking at there is at FXWW room. If you're interested in subscribing, I will send a link to you. $70 a month, I believe. So just handpick a couple of simple reports, nothing too crazy. I think it's going to be a somber affair relative to ECB counterpart. Focus on financial stability could raise some interesting monetary policy and market questions. No, it's Spirit of the Boxer, refusing to go down, can't survive a Draghi hit. I mean, Draghi, he was really upbeat a couple of weeks ago. I doubt he's not going to be upbeat. What I think the disappointment you might get is just him not speaking about the tapering too much. And that's not the biggest disappointment, especially if he is upbeat in other areas in terms of his economic outlook for the Eurozone. He would have to be explicitly delaying the taper, I think, if you want to see the Euro break 117 on the back of him, or even threaten to the 116.20 sort of breakout level. And they see greater risk of buy the rumor, sell the facts. I don't think the market is actually, I don't think the market's going to be that negative on the Euro if there is an announcement, because it's just going to be delayed a couple of weeks until the ECB meeting. Yeah, and then if there's something there to grab hold to, I think the market will be more easily finding positive stories in what he says than negative stories. And there definitely is no sustained sell-off. I mean, I suppose there is a scenario where Yellen talks up the December rate hike chances and Draghi talks down a little bit of the taper, and then in that scenario you can break 116, I suppose. But it's you know, you wait for that to happen before you respond to that. You shouldn't be thinking that's going to happen. I think they mean resistance here at 92. Grind high throughout the European session afternoon yesterday, ahead of Jackson Hole, partially driven by US dollar weakness. We expect it to be sticky and could see 117.30, 50 again. I mean, it has been gravitating around the middle of 117 for a while now. Perhaps the beginning of the rally was too early. And it is hard for the euro pound to go higher, which it is at the moment without the pound grinding lower. But it's definitely not capitulating, is it, the pound? It's a bit of a slow grind. Yeah, let's have a look at Euro Swiss actually. Euro Swiss is a pair which is pretty important for the dollar Swiss in terms of whether we're buying it or not. And Euro Swiss still well supported. Does make dollar Swiss a little bit easier to buy, but probably going to get more volatility elsewhere. Pound Swiss is probably heading towards those lows too. Yeah, Pound Swiss is interesting lower. Pound Swiss to me is sort of like a Euro Pound sell-off. You know, what I really want is a Euro Swiss sort of pullback, and you know, the ability to get some Pound Swiss on the dip and Euro Swiss on the dip at the same time that the pound's got a good story behind it, because these levels are really quite low, and it's artificially low just because of the way Euro and the Swiss respond to each other. So it's there's a lot of longer term potential for the Pound Swiss to rally, maybe 122 or 120. can have a look around it. But yeah, you don't look at it unless you get that nice level, right? You let those nice overextensions come to you, then you can start to look to get involved. And Aussie Q is sneaking higher. This is the one that we were in, remember, back in the day on the whole iron ore dairy divergence, and RBA potentially becoming a little bit less jawbony than the RBNZ. Yeah, and look, it's sneaking higher. It's probably untradeable given the lack of volatility at these levels. But keep an eye on it. We'll keep an eye on it. It's a pair that, and yeah, it looks like the Euro Aussie seems to have rebounded too. So I'll be very interested tonight in how the stock markets go in the US session, and how gold goes. If gold rolls down through 1280, US dollar in terms of dollar yen pushing up towards 110. And just see whether the euro can, hold 117 in that sort of environment as well. So it'd probably dictate how I play the rest of the week. I'm looking at risk remaining on, but there isn't really too much action so far. Okay, but I think the market will continue to buy on dips stocks unless it's fed more and more negative stories. So I'm not too afraid of holding long risk into the night. Given the multi-year US dollar short positioning as per the CFTC stats, it would take very little at least to bring some distant hope back in the US dollar's demise. That's the issue, right? The market's a little too heavy negative on the US dollar too quickly. Doesn't mean that the euro can't rally, it just maybe slows down the rally and makes it a little bit more choppy. It gets larger, like we got only a couple of weeks ago. You got that large couple of days of US dollar buying, and then a little bit more US dollar selling afterwards. A sustained US dollar rally is hard to see in the current market, in my opinion. Alright, guys. Look, we'll leave it there. Hopefully, there's no issues tomorrow. We start on time. I really happy to see Sean Lee's streaming in the room. It's a very good trader, very good analyst, and he was. I learned a lot from him, and he's should listen to his words of wisdom. He's another fundamental trader as well, so he's going to provide a lot of intermarket analysis, and but he's definitely no slouch with the technicals as well. So an ex-bank trader, and definitely a great asset to the team. Alright guys, best of luck. I'll be back tomorrow.